TradeSpoon. My name is Lakar Kral. I'm CEO and founder of TradeSpoon. And today I'd like to go over current market conditions, trade of the day, what strategies work, what strategies do not work in current volatility environment, and the portfolio. That will be the main topic. Disclosures are very important. I'm going to go through some trade examples, so please read optionscreening.com, visit the site if you haven't done that before in order to understand the risk associated with trading stock and options. And you can pause the screen if you need more time to read the rest of the disclosures. All right, let's take a look. Looking at the stock forecast toolbox, this is our main models based on neural network. Again, the framework that Google, Facebook, Meta is using and other companies to make forward predictions based on a certain sets of data. So the model is trained on the data, it learns on the behavior of the data, and then makes forward-looking predictions. One has been accurate. I'm really happy with the results. Support is 390, overhead resistance is 396. We're trading 394. Model is doing a good job determining support and resistance. I agree with the model as long as we are staying above 390 level. The path of least resistance is to continue incrementally making new highs, potentially reaching 414 level. We do have GDP number this week, and we have employment numbers and PCE data. So there's three important price points that will come out this week, which can cause either the market to retest and break above 400 level or break below 390. If we do break below 390, I think then we probably have seen the top for this year and perhaps for the next year. But I would pay attention to this level. Zooming out into 6 months, I mean, this model doesn't change. Each data point is 1 month's worth of data. It learns on the past 30 years worth of data, right? So about 400 data points, 500 data points, basically saying that 386 market is overbought. So we are at 396, we were at 402, 410. It is possible for the market to overshoot on the upside or to the downside, but the path of least resistance is to the downside, and in the next few months to retest and potentially break 350 level. So I agree with the short-term predictions in the model and the long-term predictions in the model. Spiders, again, what happened? Sorry. Spiders, again, it's 50%. It's 50%. Sorry about that. It's 50% retracement between 390 and 402, a little slightly lower. So uncertainty with China, social unrest, OPEC meeting, and oil cap on Russian import of oil. There's a lot of geopolitical risk, macro, microeconomic conditions. So it's a flip of a coin, right? We can reach 390 very quickly, or we can retest 400 based on GDP data. Again, the model basically says in the next 10 days, the bias is still with the bulls. So potentially, if you're a short-term aggressive trader, I would buy at 390 with a well-defined stop level. Please join us on YouTube for additional market commentary. We do have upcoming live trading room tomorrow, one session at 8:15, one is at 2 p.m. Click on subscribe, participate live. If you like the content, please click on like, please click on subscribe, and share the video among your friends or colleagues or someone, if you know a trader or you're part of any blog or forum, please share the content. We're trying to get to 1,000 subscribers. And the trade of the day is SH, right? Buying inverse ETF. I think incrementally market continue going higher, but I believe there's a lot more room to the downside, especially if you are not a disciplined short-term aggressive trader, right? If this is not something you do well, and you have usually hold position for a few months, maybe for quarters or even few weeks, I would use any strength, reduce your exposures to equity on the long side. That's all I have for today. Thank you very much and have a great day.